Stock market today analysis for March 1st. Aloha Wednesday 2023. I invite you to look in the description below this video for the link to ifsuccess.com. Check out ifsuccess.com if you want to get a little help on selling cash secured put options. Got free stuff, got paid stuff, and at the 1 minute mark of this video, a link is going to pop up right here giving you 1, 2, 3, 4, and 5 reasons why you should be selling cash secured put options on stocks you'd be happy to own. It is a very, very low maintenance type of strategy. It takes a little bit of understanding to figure out how to do it. There's a lot of moving parts, but it's pretty simple. You ready? Here it comes. Boom! There it is. It just popped up. You don't have to watch it right now. You can remember 1. It's a really easy number to remember, 1. So watch this video, go back and watch that when you're done. Read through this stuff. There's, like I said, there's free stuff, including a 5 video, maybe 5 or 6 video playlist here on YouTube, downloads. And if you need a little extra help, let me know right here. Today we had the ISM manufacturing PMI come out. So the Institute of Supply Management Purchasing Managers Index. Why traders should care. It's a leading it's a leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into a company's view of the economy. Tomorrow, we don't have anything being announced like that. And then Friday, again, we got the ISM, but services. And my least favorite buddies over here at We Study Markets happened to come out with an email that says, score 1 for team recession. The Institute of Supply Management's ISM manufacturing index was 47.7 in February, marking a 4th consecutive monthly decline in factory output. Any reading below 50 is considered contractionary. So what we got here? More important, though, are the ISM's finding in the services sector coming out this Friday, since services comprise a larger chunk of the U.S. economy. That's what we talked about here, ISM manufacturing. Friday, ISM services. Now this is when why We Study Markets are one of my least good buddies. If restaurant stocks are an indication of how the service sector is holding up, which I don't really think so. I don't think this is the 1970s anymore. I think it's the 2023s. I don't think a stock's share price is a good indicator of how something in the real economy is doing. But apparently, these people are at least putting an if. Then the report might be quite strong. Year to date, Wingstop is up 24, 18% for the Cheesecake Factory, 19% for Blinker International, the owner of Chili's. And Texas Roadhouse is up 12%. But you know what? Just because a stock is up 12% doesn't mean it has anything to do with fundamentals. It can be all other things. How about share buybacks? Does that have anything to do with fundamentals? Does that have anything to do with how well people are doing out there? No, it doesn't. How about quantitative easing? Does that have anything to do with it? No. So I know quantitative easing isn't going on right now, and I don't know if these companies were doing share buybacks. But what I do know is that a company's share price is not a direct correlation with how good the economy or any sector in the economy is doing. If you want to believe it is, feel free to do that. You know, if you want to believe in the boogeyman, Santa Claus, Easter Bunny, that is totally up to you. But your good buddy Brent is not believing that. Not believing that when we got all this red over here on the heat map. And we've got advancing versus declining. Almost 50-50, but declining's winning out a little bit. Making new highs, making new lows. Woo! The making new lows is starting to get more market share, more retail space over here on this little retail bar. Below Below versus above 50-day moving average. Seems like we're also creeping up on the red here. Same thing over here with above or below 200-day moving average. Seems to have moved up just a little tiny bit. And what do we got? Bears versus bulls. Well, we got 56 bears and I guess 44 bulls. Anything coming out in the news that's you know, that's a lot of stuff to read through. What else could we take a quick look at in here? I think that's going to be it for the moment. Let's get into quickly looking at the futures and S&P looking down. Dow Jones making an attempt at some recovery, but recovering from here. Here's the big candle that we're looking at, that I'm looking at, and right now it's just trying to recover against this candle. We're definitely in the bottom, below this over here in the Russell. That's the closest thing we got to try to make any recovery there. Bitcoin seems to be really starting to hold up this or stay in this range of 23 to 24,000. Silver dropped below the 200-day, kind of wiggling around there. We'll see how it's going to go. Gold is starting to try to make a comeback over here, but this is, again, just like these equities, this is where it's dropping down from, so it's got a ways to remake with that. Honestly, I hope gold and silver keep going down. In fact, I hope everything goes down. You know why? Because I like to buy things at a discount. Maybe you like to buy things full priced or overpriced. That is, again, totally up to you if you want to overpay for your assets. But your good buddy Brent does not want to overpay for assets. I want to get bargains. Natural gas moving up. Oil, 77. A little bump over here in the volume. And the 10-year looks like it's just going to keep going higher. Let's look at how the indices closed. Yeah, everything's sort of looking like the futures in a way, without Dow Jones trying to make a comeback there. Looking pretty bearish. Looking pretty bearish. VIX kind of moving down, and it's amazing. I don't know. I'm losing faith in the old school way of looking at the VIX. You know, and just like earlier in this video, I said this is not the 1970s, right? So things happen, things change, and old ways of looking at the stock market to try to figure things out, you know, they don't work sometimes. And I'm wondering if the VIX doesn't work for a direct, when the VIX is high you buy, when the VIX is low you go. I don't know. Maybe it still is. I don't know. The 0 days to expiration options really seem to possibly be putting something in there. I'm trying to discover out a little more. I heard the VIX started dropping like the first week or the last week, the most recent expiration week, to try to get rid of that. But a little more. Your good buddy Brent needs a little more. We looked at Bitcoin. We looked at oil. We looked at gold, TLT, 20-year treasuries. Just been moving down last month and continues. Made a new low today, but rallied up just a tad bit from that new low. Dollar kind of trying to keep some strength up there. We'll look at these 12 sectors relatively quickly. Bearish, increasing some volumes. Heavy shorting came in. Healthcare, bearish. XLF, it's not looking bullish. Industrials, you know, kind of sideways. It's not here. Look at, tried to test this 102 area and pulled back. Basic materials trying to make a rally up here, but hitting some resistance right in here. The communications ETF is get it gapped up here and just came right back down. Retail looking weak. Real estate looking weak. Utilities still looking weak. I'm telling you, it might be a time to, you know, polish up your old shopping list in the utility sector. Ooh, consumer staples, same thing. Look at this. We had some major volume come in over what's normally happening. So maybe there was some institutional money dumping some shares or something. Who knows? Who knows? It's not buying, so we know they're not covering shorts. But okay, so consumer staples looking pretty weak also. Consumer discretionary also looking weak. Some good volume coming in there. A lot of these on the bottom here have some good volume. And energy seemingly trying to battle this 84, 86-ish type of area. Maybe debatably all the way down to the high 82s. So, you know, overall, quick look at the markets. Things are looking weak. Things are looking weak. And I wouldn't be surprised. Here's our handy dandy line chart that is for the last 10 years, 1 week. Here we are. Where did we close yesterday? Where did we close? Let's look over here. Yesterday. Now look at this C. Look at that C while I hover over there. Yesterday we closed at 196.26. Today we're closing at 194.74. Catching some support around this that 200-day moving average. Maybe we got a small little double bottom here. For what it's worth, this slow stochastic is showing that the momentum still seems to be kind of to the downside, right? Doesn't mean that prices necessarily have to drop. Sometimes you have a wide gap in the stochastic, and whether it's up or down, and prices don't necessarily move a whole lot, but it's probably maybe some more selling pressure. At the minimum, we'd have to have something really, really drastic happen in order to probably get some up movement. But we're right. Yeah, we're right in here. We're back into this area. And today is Wednesday. We finished the Wednesday trading day. We'll see how the Thursday trading day and the Friday trading day shakes out. Look at that, the overall, what is that called? What do you call those things? How the weekly charts shake out. But speaking of those different charts, what we'll do is take a look over here at these general markets, and we'll look at let me zoom this in real quick. 1 week. Let's look at the monthly chart. Since we just finished the month of February, we'll take a look at the monthly chart for, let's go with the ETF so we can see some volume. So look at the S&P 500. So we're looking at a 15-year timeline in each candle representing 1 month. And this is what the heck indicator is that? That's not what that's a 200 period on that. But what for a monthly, let me change this to a 20 period. So that's going to be closer to representing the 200-day moving average, right? Should be 20. I think so. I'll save this grid. And it's a little off, right? It's definitely a little off because over here, the daily, here's our 200-day. So why don't we, I'm just going to leave it on for the moment. All right, so here we have monthly chart. Actually, it's throwing me off. I'll just get rid of that. Since it's, if it was at least above it, lingering around, but it's significantly below it. I forgot about that. I kept trying to play with it. Man, I could never figure it out. But I didn't play with it for that long. Like I maybe spent a half hour one day trying to tweak the settings and get it closer. But nonetheless, all right. So what are we looking at here? Okay, we're on a monthly chart, 15 years. All we have is volume, and we got this beautiful trend channel that I set up. and we see we're outside of that trend, right? And this trend channel, that is subjective. That's not written in stone or anything like that. And technically, you know, even if you got some concrete, you got a chisel and a hammer, and you made some stone and you wrote something in it, you know, it's still kind of subjective. Like if you said Brent is the blank, that would be your opinion. That's still subjective, even though it's written in stone. But what do I see going on here? We kind of got this, I'm seeing a bit of like a line here with prices kind of moving up, and with this last January's up candle, even though February was basically a down and it tested up higher than here, we're still in the top 50% of this candle right here. So that's a little bit of bullishness, right? It'd be different if we were all the way down here, but we're not. We definitely have to see what happens with this candle, but at the moment, you know, I wouldn't be surprised if actually I wouldn't be surprised with anything. If March ends up being lower or higher, wouldn't surprise me either way. But if March does go higher, then we might end up breaking out of this sort of, maybe breaking above the 420. But, you know, from 420 to 440 is really what we want to see it go through there before we start thinking it's back into a bull market. But at the moment, we're definitely sideways, right? See some sideways with our range to the bottom kind of closing up. Dow Jones. What's the volume like? Normal type of volume. Look at this big spike in volume in there. So it's kind of been this more in the normal volume range. And we are this, okay, so here we got more of a, if you're going by two candles, February and January, this is looking more on the bearish side here, right? Because here's our January candle. Our February candle is closed well below the open of that. So it's well below. We're down here around this 327 area, probably catching support right through there. And let's look at the NASDAQ via the Qs. What do we got? More definitely over here. Which months were these? It's more the beginning of 2022. Yeah, it's sort. There's a lot of volume going through there. If that's really. I've been spending more time trying to figure out exactly what volume is telling me. I'm fairly decent at looking at candles and getting an idea of at least where something's not going to go, or things like that. But not as much at implementing the volume, unless I'm using a volume profile. I'm kind of better at the volume profile than I am at the average volume. And what do we see going on right here? So January we had this big up candle, and then February we traded significantly above that, but just sold off. So this, we just got a series of lower highs really going on, and this is kind of telling us that there's a lot of selling pressure. When it starts coming up here, some selling really comes in. What was the volume like in relation to that right there? Yeah, this candle right here, so, that volume bar. So it could be possible that as it got up there might be some institutions or bigger amounts of money just flowing in, selling short. And right now, though, our compared to this bull candle right here, February's candle closed in the top 10%. We're still in the top 10%. If it keeps pushing to the top end of this range being between these two candles, then maybe we could see some more movement to the upside. And let's look at our last one on this list of IWM. Great. And yeah, okay. So we got a similar thing over here with IWM. Looking kind of flat here. Seems like prices are pushing up. And so maybe, maybe there's some money. It seems like the range is kind of getting tighter on a lot of those. So I wouldn't be surprised if this month, if we see a rally back up to on the S&P 500. I wouldn't be surprised if we see a rally back up to the 420-ish area. I don't know. I wouldn't be surprised either if it dropped lower. But I'm going to be ready for anything. I hope you are ready for anything. And that is really the best way to trade, is to be in a position that you make money regardless of what happens. At least for some of your portfolio, right? If you could have 60 to 80% of your portfolio making money regardless of market direction, and then 10 to 20% or whatever you do on more speculative directional trades, you're going to be in a pretty good position, right? And if you want some help on getting in that position where this strategy is it's profitable regardless of direction, right? There are some things that you got to do. There's some steps to it. There's some things you got to know. There's a little bit of skill involved, but once you know it, it's kind of like tying your shoes. So check out ihavesuccess.com. If you have any questions for me, hit me up over here at Contact Us. That us is a whole three. We have 3 people in this team. It's me, myself, and I. Aloha.